Hello and welcome to Breaking Views. I'm Sarah Jacob. The big story of the day. The wholesale price inflation has risen to 14.55% in March. It has completed 1 year in double-digit territory, and wholesale price inflation has risen to a 4-month high of 14.55% in March. This is against the 13.11% in February, and this rise is basically due to surging prices of crude petroleum and natural gas as well as basic metals. Now, according to the Commerce Ministry, the prices of crude and petroleum products have risen due to a disruption in global supply chains caused by the Russia-Ukraine war. And that's not all. This morning, the week started this Monday with domestic stocks plunging sharply, dragged lower by heavy selling pressure in the information or IT stocks. The ongoing Russia-Ukraine crisis and rising inflation dented investor sentiment. Investors' wealth tumbled by 3.39 lakh crores in morning trade on Monday as equity markets went into a tailspin, with the Sensex plunging 1,291 points and the Nifty ending below 17,000 points, with the Sensex tanking at 1,172 points there. The BSE benchmark index tanked 1,291, dropping to 57,000 in morning trade after a weak opening. So the Sensex and the Nifty tanking amidst inflation worries and weak earnings. Can D Street bounce back, or will the bears tighten their grip? Now, the big question right now is, how will all of this affect monetary policy? Remember, the RBI tracks consumer inflation primarily for formulating its monetary policy, and the question now is, how soon before inflation rates go up? Will inflation rates have to go up? Let's go across first to Sunil Prabhu, who's been monitoring this story amongst other news also in the capital. But Sunil, wholesale inflation accelerating to a 4-month high of 14.55% in March, and this is according to official data. But you know, perhaps the possible headliner here is that this is actually much worse than what any economists were expecting.
That's right. In fact, it's for 12 months actually. It has been above 10%, and so it's definitely a cause of concern. You're talking about the RBI and the monetary policy. It's in that context they have come out with a report today, and they still find the RBI still finds for them there is an upside a trend that is still continuing, especially for crude prices. Petroleum prices, as we saw, have reached an all-time high. So it is definitely a cause of concern. Even retail is around 6.95 in March. So these are definitely indicators for the Finance Ministry as well as for the RBI to act and ensure that the common man does not suffer. As I've been pointing out, inflation is a tax which is very, very hard, not only on the middle class but also for the poor, and it's something that the government will have to take certain measures to ensure that it is not inflationary anymore.
All right, Sunil Prabhu, thanks for that. So the big question right now, how will this affect monetary policy? Because as I was saying, the RBI tracks consumer inflation primarily to formulate its monetary policy. So does this mean interest rates will have to go up? And the question is, how soon before interest rates go up, which means all of us get affected in our pockets. So is it time to put inflation before growth? Joining us on the show, Sanchita Mukherjee, an economist, senior financial services professional, a former senior vice president of the HSBC Bank. We have Ranbir Singh Patania, spokesperson of the BJP, Dr. Shama Mohammed, spokesperson of the Congress. We also have Professor Santosh Mehrotra, visiting professor at the Centre for Development at the University of Bath in the UK, a research fellow at the ISA Institute of Labour Economics in Bonn, a former professor of economics from JNU. So first and foremost, Professor Mehrotra, let's start with you. The WPI inflation has now been in double-digit territory for 12 consecutive months, so that's a whole year. But with these incremental fuel price hikes actually only kicking in during the latter half of March after those big elections, has the higher global oil impact, is that yet to be seen? Has that been fully reflected in the general price levels? I'm just trying to find out whether this is going to get worse before it can get better. Is this just the start?
Well, you see, let's just recall that oil prices had shot up suddenly when the war broke out in Ukraine to $120. And they have tempered since then. So that's clearly good news. And let's just also remember that the OPEC countries realize and recognize fully that the international economy is still in recovery mode from the contraction that took place in 2020. So they'll be killing the goose which lays the golden egg, if they were to raise prices even more. However, of course, economic sanctions remain a threat. And so there is uncertainty. I cannot guarantee one way or the other, but it's a bit unlikely that it will go up. Having said that, the fact is the current situation is absolutely awful. It is an unsustainable situation for the middle class and for the poor. And honestly, to be brief, I'm sure you'll come back to this subject. There's little that the RBI will be able to do, because the RBI is in any case facing international pressures, because the US Fed is going to raise rates because they are facing quite unprecedented inflation, the highest in 40 years. So let me stop there.
All right. Yes, we do want to get to what the possible solutions are and whether the RBI is up against a wall. But first, I just want to establish what the problem is so that we can even tackle how to tackle it. Ms. Mukherjee, inflation hitting this 17-month high. Disaggregated data for the March Consumer Price Index shows a dozen commodity groups. This includes clothing, milk, vegetables, personal care, all of them surging to multi-month highs. What does this suggest to you? Does this mean that inflation is now turning structural?
That's a very good question, and thank you for having me over. I would like to address this with a different perspective, not really the perspective in terms of the oil prices. Say, for example, let's understand wage hikes in tandem with inflation. So what has happened consistently and steadily from 2011 to 2021, if you were to see, wage prices have consistently been on the rise, right? So India as a country has been on a diminishing poverty categories of countries. The only points where poverty increased marginally would have been during demonetization and the onset of COVID. Consistently, consumption and wage prices have been addressed by MNREGA schemes, all of that, and the food grains passing on to the hands of the consumers, of the recipients. So a lot of wage prices have actually translated into personal care goods, effects, consumer durables, non-durables, and all of that. So that has also added on to the inflation. In fact, if one were to monitor the logistical cost, which is of course the fuel-led, the oil prices-led inflation, which is not structural because of the war and the oil and all of that. What is actually worrying for the economics, which you may call as a structural going forward, we need to see, would be the wage price hikes in tandem with the inflation, which has happened.
Okay, so what does that mean then for rates? Are we going to have to now start prioritizing growth, inflation before growth? In its first bi-monthly review of the current financial year, the Central Bank's Monetary Policy Committee kept interest rates on hold and they prioritized inflation before growth. A switch they'd made, I think, at the start of this pandemic to tackle the fallout of the pandemic. Is that going to have to change, Ms. Mukherjee?
Yes, most likely this might actually nudge RBI because it's beyond the comfort zone of the RBI's comfort with inflation. But at the same time, growth is tepid. We are just coming out of the pandemic, and data suggests that the consumer sentiment is still low. So we'll have to walk a very, very fine tightrope in terms of when and how RBI will be increasing the interest rates and how it will react to these very large numbers, definitely.
Professor Malhotra, the RBI, the MPC had been pursuing this growth supportive policy stance since the outbreak of the pandemic. The shoring up the economy was really its main focus, its only focus now. Is that going to have to change? Is inflation now the bigger concern, the one that requires urgent policy attention?
I suspect, given that the RBI's policies are pretty much determined by the government, they are not independent. And as we will move into election territory very soon, a few months down the road, the government will obviously want to contain inflation. And it may well, go slow on the growth. It's not that growth is happening a lot in the sense that private investment is not growing on the strength of growing demand. There's not much growing demand, and therefore private investment is unlikely to grow or reduce if the RBI was to raise rates. But I think the bigger question I would put is how much raising rates is going to actually control inflation, because what is excuse me, what is driving the inflation? Two things. One is food, and food accounts for about 50% of the CPI, the Consumer Price Index. It's 55% in rural areas, 45% in urban areas. And the next is another 6 or 7% added by fuel. But then fuel adds, and both of these are out of the control of the RBI. So RBI can at best control about 40-45% of the total product prices. And that's really where the constraint of the RBI lies. Ultimately, the ability to control prices lies with the government, with the Ministry of Finance, which has to stop raising fuel prices, and it has to make sure that the dals become available, so dal prices don't rise, the oil seeds become available, so cooking oil prices don't rise, and petrol and diesel prices need to be reduced. It goes without saying.
Ranbir Singh Patania, please come in over here. The responsibility, the accountability stops at the door of this government, which has to bring down these fuel prices.
The Honourable Prime Minister if you kindly go through the address of the Honourable Prime Minister on the floor of the Parliament. We are faced between two situations. In 2013-14, there was a government which surrendered, which said, no, we cannot control the inflation beyond this point. But we are having a system in place, a government in place, and a leader in place who says, we will, and we shall counter this inflation.
How, sir?
First of all, now I'm coming to it. With regard to the supply chain disruptions created by pandemic as well as this crisis in Ukraine, despite all that, everybody knows that 85% of the imports of crude oil, they come from the outside. If we see our cargo, everybody will agree with me, on an average, we could say duration, a cargo ship used to take 2 months to go to US and come back to India. But now, in the changed geopolitical conditions and particularly this post-Ukraine crisis, now we are taking 4 months. A cargo ship is taking on an average 4 months to reach from US and reach back to India. I think the only two solutions to counter this is what not as a commandment, but government has been working on it specifically. First of all, we need to reduce our dependency on fuels, and we are going to do it. The Honourable Minister, the Union Minister for Road Surface Transport, he has given a call for...
Is that the government's official policy?
Yes, biodiesels. We have increased our consumption, our production policy on biodiesels, and we have increased our production by 10 times. Now we have introduced e-vehicles also.
That's not going to happen overnight, sir. What is the public supposed to do right now?
You see, very frankly now, the major part of our exports, they are from outside, approximately 85%. So we need to reduce our dependency to we could say virtually.
Are we going to stop producing electricity? So this is not the official stand of the Indian government, and they have said so clearly when it comes to discussions on climate change. India has always maintained that it is unfair for the Western world to expect us to reduce our consumption of energy. So I don't want to continue this conversation anymore because I do not think this is the official stand of the government. And even if it is or something has changed is not going to happen overnight. But Shama Mohammed, please come in over here. The irony is that inflation is heating up, but it doesn't singe the political economy. The runway prices have not affected political outcomes. We've seen what happened in the recent elections.
Yeah, that is because the runway prices did not affect it because they did not raise the petrol price for 137 days. But after the elections were, after the results, that's why they raised it. So in the by-elections, the people of India understood that Hindustan ke janta ke upar dhoka kiya hai is sarkar. So the answer we saw in the by-elections, they lost all the by-elections because they understood that this government not only robs from you, but it also cheats you. Now, let me tell you very clearly, the oil price has gone up. It was going up before also, but they did not do anything about it. They kept it stable for elections. They have collected around 46 lakh crores, right? In February, that is the oil from the excise duty. Then in February, the GST collection was 1.33 lakh crores, which is 15% higher than last year, 2021, and 25% higher than pre-COVID years, pre-COVID time. And then let's understand in March, the GST collection was 1.43 lakh crores. Now look at the revenue of this government. This government just doesn't care about the people. What they need to do right now is reduce this excise duty, because once the petrol and diesel, especially diesel prices go down, the inflation can be controlled because it depends on the diesel prices. So what we need to do is cut down the excise duty immediately. But this government has only one thing in mind: to shore up revenue. That's why the gas or everything went up after the elections, not during the elections. And this is the problem, that unless and until we reduce this excise duty, the inflation is not going to go. And let me tell you one important point. Today, for packaged foods, they are wanting to raise the GST from 5% to 8%. So again, food prices will go up. So that is this government. They just don't care. Why are they not? And like the other gentleman spoke here, that the
Mr.
price
Singh.
of, Mr. Singh.
Sorry, Professor Malhotra.
Professor Malhotra just said that the oil price have gone down. Yes, 2 days ago it was $98 a barrel. So why haven't our petrol prices gone down? So this government increases petrol prices when the world prices go up, but when it goes down, nothing to the
It hasn't
consumer.
come down.
It doesn't come down. So that is what I'm trying to tell you, is this government is only about shoring up revenue. They just don't care. And he said about 2014, of course, we've controlled it much better than what's happening right now. People could afford gas. It was 400 rupees. Now it's 1,000. Look at the diesel prices and petrol prices. At that time, when it was $108 a barrel, we were giving 76 rupees for petrol and 51 rupees for diesel. And the excise duty for petrol was 9.2 and for diesel was 3.6. So what is this man talking about?
Okay.
You know?
Sanchita Mukherjee, under Raghuram Rajan, the RBI had adopted an inflation targeting framework where the principal goal of monetary policy was to have predictable inflation in the range of 5% per annum. Since Mr. Rajan's leaving, it appears that the government and the RBI's commitment to this has wavered, because under the law, the RBI is required to write to the government with an explanation if inflation crosses 6% for 3 quarters, which it did in 2020, yet the government has not bothered to ask the RBI to fulfill its obligation. Has this government and the RBI taken their eye off the ball where inflation is concerned, as Shama Mohammed says?
I will purely answer this apolitically. A lot of times politics go hand in hand with good economics, good or bad economics, whatever you might call it. A lot of times they do not, they diverge. In this situation, evidently it has, in terms of this phenomena of these oil prices breaching $100, $140 a barrel is fairly recent, right? It's fairly recent in the sense because of the war, this situation has happened. So it's yet to seep into the actual impact on society, so as to speak. Now let's understand, the last 2 years has been pandemic driven, right? So within the pandemic, one can arguably insist upon the fact that both the RBI and the government has managed to keep up the business machinery, the livelihoods of people, and the pandemic, the health aspect very well, because this is a very large country. The GDP growth is also very stellar compared to other countries of the world. This phenomena of a supply side disruption which has happened globally I mean, if you see, most countries are suffering. India is the latest to be impacted because of the Ukraine-Russia war. Now, having said that, please let's understand the economics behind it. The government has two ways in which it conducts business, right? It has its sources and then it has its expenditures. On one hand, we say that the growth is tepid. So the government has to pull up its socks and spend more because private investments are not happening, right? So if you expect the government to keep on spending more, but at the same time keep on cutting away at its sources, then it will come down to the fiscal deficit, which will be unsustainable, and we will all land up paying from our own pockets because an external rating agency would just junk us to a status of a junk bond.
Under these circumstances, right? Does the RBI have any other option except to start tightening policy?
We'll be tightening our belts very soon and we'll all have to gear up for that. Having said that, the RBI has forecasted a very good monsoon and a very good Rabi crop harvest, which can come as a relief where food prices and food inflation is concerned.
Okay, I want to, before we're going to be out of, I'll just come to you, Shama. I want to just focus on one point and then I'll come to you, Shama Mohammed, because I don't want to miss this or oversee this if we run out of time. Professor Mehrotra, I know you follow the agricultural economy also closely or especially closely. So, inflation is higher in rural areas, correct? Is that right? And where the population is more vulnerable?
You see, food inflation is what impacts the vast majority of the population. And in rural areas, a significant proportion of food that is produced is for self-consumption.
Yes.
So they are net buyers. I'm not saying they are not net buyers. And
yes,
it impacts the poor both in urban and in rural areas. It's very difficult to say if inflation impacts the rural areas more or less. I think the more important point, Sarah, here is, unlike what Ms. Mukherjee was saying, that we all have to tighten our belts and the government needs resources. Well, the government doesn't need to collect these taxes on petrol and diesel. It's an indirect tax. Correct. It's a regressive tax. It's imposed on everybody. What it needs to do is to reduce indirect taxes and shore up direct tax revenue. What this government has allowed to happen in the economy because of its policies, especially since 2019, is that the share of direct taxes in total tax revenue has come down while the share of indirect taxes has gone up. In a time when there is an aggregate demand crisis in the economy, private final consumption expenditure is low because joblessness is high.
Okay.
In that time, you need to shore up demand. What this government is doing is shoring up its own revenues.
Sanchita Mukherjee,
that's what I said.
Response.
No, this is what I mentioned to you, that it shores up its revenue. That's what it does.
I'm saying it should not. I'm saying
that's what I'm saying. I
not.
agree. That's what I'm saying. That's what I said. It should not. That is what I mentioned. I agree with you, Professor Mehrotra. And also to Sanchita, one important point. Last year, when the oil prices were going up before the state elections, the government pulled up the oil companies, said no. For the elections, just again, the elections took place. No, the oil prices did not go up here. Again, once the elections finish, the oil prices go up. What sort of government is this? This is basically a government which cheats its people. It doesn't depend upon the oil prices. Basically, it depends upon when the government is on election mode. When people are going out to vote, we are not going to increase the gas price. We will not increase the diesel price. We will not increase the petrol price. And like Professor Mehrotra said, the indirect taxes are paid by everybody, even the poorest of poor. The GST keeps going up about everything. Then you are shoring up revenue through excise duty. Direct tax is a better way. So why not immediately, since the oil prices have gone down, cut down on the excise duty? Why is the government not doing it?
All right. Why? Sanchita Mukherjee, please respond.
My last take on it, very small take on it. So far as cutting of excise duties is concerned, the BJP ruled states, they have already done it. But the Congress ruled government have refused to do that. That's what we are doing.
Shama Mohammed, please let him speak.
Just wait for 3-4 months. Just wait for 3-4 months. Everything would be all right. Despite the disruptions created by the pandemic, we are a record exporter. We had a record FDI. We had a record production of the agriculture as well as production of oils also. Just wait for 3-4 months. Everything would be all right. And please don't divide in all that BJP versus and all that parties and all that. We are a government under the leadership of Pradhan Mantri Narendra Modi ji. We have said we have created a growth. We have laid the foundation for it.
All right. I don't know if the public has the luxury of waiting for 3-4 months at this rate of inflation. But Samchita Mukherjee, I want to just give the last word to Samchita Mukherjee because you were asked a direct question by Professor Mehrotra.
I would love to answer that actually.
Please do.
Regarding the direct taxes, there are 3 points over here. Direct taxes happened when corporate earnings go up tremendously, which has not been the case over here. Point number 2, it's not tremendous.
What are you saying? I'm sorry, I cannot allow this lady to continue.
We've just come out of the pandemic.
What are you saying?
And
I'm sorry.
we're on the verge of a fledgling economy coming out of the pandemic, right? So earnings, no. Second point, corporate taxes have not been raised. So it's not that the taxes in fact have been raised. The taxes actually have been
They
brought
should
down.
be raised is what
They should be raised, Sanchita. They
The
should be
third
raised.
point has been only because of compliance. People have actually chosen compliance. The government has gone about with huge compliance on direct tax, due to which we've had a very healthy tax collection, a compliance which has never happened in the history of India. So that has been the tax compliance and the tax collection.
All right, unfortunately, we've
That's
opened up this controversial subject about corporate tax right as we have hit the end of the show. But thank you all for joining us. I'm sure this is not the last show we're going to be doing on inflation, because clearly these inflationary prices are not going away anytime soon, unfortunately, for the Aam Aadmi in all of us. Thank you so much for joining us tonight.